Hey everyone, it's Helen from S&B Deal Hunter. Today we have Nick Akers with us, an entrepreneur who acquired an IT managed service company, STL Communications, back in May of 23, and who's significantly grown the business since. I'm very excited to hear Nick's story. Nick, it's great to have you on today.
You too, Helen. Thanks. Appreciate it.
Nick, tell us about your background. How did what were you doing before the search process, and what kind of led you into buying a business?
Yeah, sure. My education is it's a purely technical education, right? So my undergrad and graduate degrees are in chemistry. Uh, Literally never had a single business school ever in college. And then just through a series of events, maybe got lucky, I don't know, invented some pretty interesting things while in graduate school and got the idea to license that technology from the university. And that evolved into a venture capital backed startup company. So I ran that for 7 or 8 years, and we ended up bringing in a strategic at that time, and that formed kind of a natural separation point for me to go on and do other things. From there, my career looked fairly traditional. I ran sales and business development for an engineering firm in the aerospace industry, but I consider the bulk of my kind of formative career years were at a chemical company. It ended up being a family-owned business. My father-in-law owned it, and was really the president there. So the title was managing director, but it was more like a president, chief operating officer type role. Um, Nice sized business. There were about 150 people there when I started. It grew to over 300. We had 500,000 square feet of manufacturing facility in the U.S. Built a factory in Poland, and really kind of took the business through the professionalization stage, right, from founder to more professional management. Recruited and ran the board, all those types of things. But we got to a point there where the business had grown about as much as we were going to do without taking some pretty significant next steps, like an acquisition, or would we bring in private equity? It was at that stage. And so it became clear we weren't going to do that. And I decided to burn the boats and go try to find my own path in life. Left there with really no plan, but it evolved over maybe 2 or 3 years into a traditional search fund approach to identify and acquire what ended up being this company, STL Communications.
Out of curiosity, what did you invent that you licensed?
Yeah, it's the simple way to describe it is it was something in the advanced materials world. So it was an advanced catalyst that could be used in different types of chemical reactions. So, a catalyst will essentially reduce the amount of energy needed for different reactions. So on industrial scale, you talk about saving money and energy input, and that's really what we were up to.
Very interesting. Very over my head, but very interesting.
I've
Um,
forgotten so much about it at this point. It's a long time ago.
what made you decide to go down the traditional search fund approach, I guess, in those 2 to 3 years where you were kind of navigating what's next?
Yeah, it's a bit of a story. So when I left the family business, I really had no plans, but I knew that I couldn't go work for somebody else. Like that's just not in my nature. I needed to own something or be running something as the CEO. I mean, that was kind of the thread of my career up until that point. So, and this was also, around the time when COVID was getting started. So it was a strange, couple years or 18 months. What I first started doing is because of the background at the chemical company, we had started to think about acquisitions, doing acquisitions ourselves, or we got offers all the time from private equity and strategics to acquire us. So, I had exposure to some specific investment theses in the specialty chemical space. So I started to just very casually explore that with some private equity firms, and got a lot of traction very quickly. So everybody got it, and essentially, I became backed by a couple of these firms to function as an independent sponsor. I didn't really even know what that term meant at the time. Was just kind of making things up as we went along, but so started to pursue acquisitions, and these were large acquisitions, 100 million plus type deals. Um, and I was generating deal flow myself, so I was starting to exercise that muscle and learn that activity just for my own network and working with brokers in the industry. These PE firms were giving me deal flow. We pursued a number of things, through the LOI stage, but obviously didn't close anything. That was great experience. It was like an accelerator course in a peek inside M&A and private equity. It was really fun, but it was taking a long time. I always describe it as, I was on the private equity firm's timeline and not my timeline. So I spent 12 or 18 months doing this. They were of course getting other deals done in their firm, but I needed to get Nick's deal done, right? And about that time, at that 18-month mark of being this quasi independent sponsor, I happened across the search fund world. Again, a term I had never heard before. I read it on LinkedIn or wherever I came across it. And, it immediately struck me as to do what I just said, get on my timeline as opposed to somebody else's. And ended up partnering with Novastone Capital, which functions, it's like a combination of a traditional search fund in terms of the economics and the approach that the searcher takes, but they have this accelerator type function as well, where they provide a lot of back of the house resources, M&A folks, in-house legal. And I viewed them as a way to be more successful in the search. And I think that's what ended up happening.
Got it. No, that's super interesting. When you were, I guess not a lot of people are familiar with, what an independent sponsor is. Can you just talk a little bit about that? Were you getting paid by the private equity firm? What was that relationship like, and what were you kind of expecting to get out of it if you did close a deal?
Sure. Right. So, there's probably a lot of different definitions of an independent sponsor. I'll give you mine and from my experience. The key question you asked is, were you getting paid? And the answer was no. And that's part of what led me to go into the traditional search, because, you do have some, amount of compensation. And my wife, during the independent sponsor phase, it started to become harder and harder to justify to my wife what I was doing and not getting paid. But the arrangement that was expected is, depending on what was acquired, the independent sponsor might have no role afterwards, right? You're just kind of handling the deal, and perhaps you get to buy in the deal. You're compensated, of course, for finding the deal. So there's different ways that the independent sponsor gets compensated. You also might go onto the board post-acquisition. That's fairly common. And in some cases, you might end up being the CEO if that's what's needed in the company that was acquired. So any and all of those things were on the table as we were pursuing any of those deals. And I think it would have been very deal specific.
Got it. And these were much larger deals you were mentioning, like 100 million plus types of opportunities.
Yes, absolutely. Yeah.
Got it. And I guess, can you share a little bit more? A lot of people who've been on this podcast, who have interviewed, have gone down that self-funded search model in a variety of capacities, I think mostly SBA, but tell us about what a traditional search fund looks like. I think not a lot of people, are super familiar with that model.
Sure. So again, there's a lot of different definitions of a traditional search fund. So I just give some generalities, but as somebody gets into it, these numbers might skew a little bit. But the idea is you raise a fund called a search fund from investors. Now there's a lot of professionally organized investors or even firms that contribute to a search fund. I think the model started out where it's, you're dealing with a family office or just independently wealthy individuals. So they contribute money to you as the searcher, and it can range, from $400,000 to maybe $700,000. And that money is meant to cover your expenses, typically for a 24-month search phase, right? So that give you 24 months to identify an acquisition target and close the deal. And so you use that pool of money, call it $500,000, to draw some amount of very modest compensation for yourself, but also pay for all of the deal costs, your deal sourcing, your legal, your travel, and everything else. And then the idea is at acquisition, those same individuals will contribute the equity capital needed to fund the deal. Of course, you're going to use some amount of debt, and the economics for the searcher is, typically you're going to earn about 25% of ownership in the deal over time, right? So you typically see three tranches of equity to the searcher, basically split up into thirds. You get some amount at close. You get some amount that's time-based that will vest over, 4 or 5 years. And then that last third is based on achieving IRR hurdles. And so the more IRR you generate, you can get the full amount of that last third, which all of that adds up. Again, it's specific on the search fund deal that you come up with, but about 25 to 30% of the equity.
Got it. No, that's really helpful. Thanks for sharing. And you mentioned usually folks are also taking on some debt. Where are they finding that debt? Is it them personally guaranteed, or is there no expectation of that?
Well, from what I've seen, most folks in the traditional search fund are getting debt that they have to personally guarantee. In my case, I did not. I found debt, traditional bank debt, with a great lender, regional bank near us, that didn't require a personal guarantee. And part of what allowed them to skip that is our investor base. You have a strong equity from your existing investors or acquisition investors, so they didn't require the personal guarantee. And that was almost. I probably would have ponied up for the PG if needed, but I've told other folks in a traditional model, technically you can get fired, right? So you got to be careful with that personal guarantee.
No, that's interesting. No, and the technically you can get fired is a very big point. So no, that makes sense. And I guess with this traditional search fund model, with the debt you do take on, I'm guessing it's not as high, obviously, as someone going the self-funded search model and maybe getting it like 90% financed by the SBA. What does that generally look like in terms of how much leverage you're putting on these deals?
Yeah, I think you're absolutely correct there. I haven't heard of traditional search funded deals getting pushed to that like 80 to 90% debt load. And it's each deal is going to be different, but it's going to be like maybe 2 to 3 turns of EBITDA, whatever the lender requirements are going to be. But yeah, we were at about roughly, call it 40% debt, 45% debt at close. Fairly conservative.
That makes sense. And I guess, when you did start going down this search fund path, did that completely change your search criteria initially? I mean, you landed in sort of like the MSP space, which is very different from the world you came from. But what did your buy box look like when you first started this process? And were you going for a certain size deal since you were going the search fund model as well?
Yeah, that's a good question. So the Novastone program, at least when I joined, the searchers coming into the program were expected to have a pretty honed search thesis, because at this point the program has grown quite large. There's probably 50 active searchers across the globe. Probably half of those are in North America. So by having searchers focus on specific industries, then you don't have people tripping over each other and competing for the same deals. So I came in with a hyper specific search thesis in specialty chemical because of the background made sense. And I thought I was going to do the proprietary thing because of my strong background and network and all of that. We looked at a number of specialty chemical deals. I always say I ended up, in hindsight, wasting a lot of time on the proprietary thing for a number of reasons. We spent 6 months and really didn't get anywhere. A lot of conversations and IOIs and LOIs, but it was clear the sellers weren't necessarily all that serious. What I also learned in that time is the valuation expectation for a specialty chemical deal in the market is misaligned with valuation expectations for a search fund deal by a lot. So, even on the small end of specialty chemical, you're like 7 maybe, and that's getting lucky. They're going to be 8, 9. And again, this was coming off of COVID, so it was still a crazy time. So about 6 months into my search, realized that it was extremely unlikely to get a specialty chemical deal done. So I decided to pivot, and I pivoted in two things. So one, away from proprietary and focusing almost exclusively on broker deals, and then looking essentially industry agnostic. So forgot about specialty chemicals. And at this point, I was just looking to get a deal done, right? Because that clock is ticking. These investors have trusted me with the search capital. I needed to get a deal done. So opened up the lens, and, looking for the financial metrics that we all look for, right? So, a minimum EBITDA of, 2 million on the very small side, but certainly looking for like 3, 4, 5 million of EBITDA. Recurring revenue, low capital, just the whole laundry list of search fund stuff. And this business, the STL Communications, fit almost all of those criteria. So once I found this one, we dug in hard and put an LOI out that was accepted. What was it? Probably December of 22, and then we closed in May of 23.
Wow. And what did that did you submit other LOIs and between that one or before that one, or was that sort of the first one you seriously pursued?
Well, I think I submitted maybe 3 LOIs prior to this one. And we've all heard the kind of the advice or wisdom, submit LOIs, submit as many as you can, just keep going, keep going. I didn't do a lot of volume of LOIs, but those first ones, in hindsight, glad I did it, because I got a lot of kind of the rust out of the process of myself, right? So, I got used to dealing with brokers and sellers. But again, in hindsight, those 3 LOIs that we submitted were not good businesses. So I was glad we ended up where we did.
No, but it sounds like it was the right move.
Yeah.
So 5 months, between diligence and close,
Mhm.
what kind of happened during that period? What were you focused on? How did you how did you approach diligence, and what did you spend the bulk of your time on?
Yeah, it was, I think, a pretty normal and maybe anticlimactic diligence process. There weren't really a lot of findings that caused anybody concern. It just kind of the mechanics of going through everything. Certainly, we spent a lot of time on the revenue and the validity of the revenue, especially recurring revenue. So digging into all of those contracts, figuring out when they expire, when they renew, do they auto renew? What's the history of, have they auto renewed for the past 5 times? Looking at customer churn, those types of things. Of course, looking at cash flow, seeing if all of that tied together and made sense. So that's where we spent the bulk of our time.
And did you spend a lot more time fundraising, or were your investors pretty eager to hop onto the deal since you already, I guess, raised that initial search fund from them?
Yeah, that's another good question. And this program, the Novus program, one of the things that they pitch as the selling point is, if you bring a deal that fits in whatever criteria is defined, our investor partners are, they're going to write the check. I mean, it's not as simple as that, but I mean, that's basically the concept. Like, if you get a deal, the money's not going to be a problem. And just by the time that I did this, I was the first deal in the US that Novazone closed. So I think there also was perhaps some amount of excitement, with the others. Hey, let's get this one done. It's the first one. Let's get it done. So they were all very supportive through the process, and getting that part of the funding was no big deal.
Got it. So the partners they had, it wasn't like a committed fund. You did have to go out and raise it from individuals. Is that correct? Or how did you navigate that?
Yeah. So the Novazone has a set group of, almost think of them like LPs, right? If you were thinking about a private equity analogy, but it's mostly family offices, right? So that kind of buy into Novazone's approach, and you meet them uh, before you join the program, so they get to know you. They get updates from you throughout your search. So the idea is that once you actually bring the deal with an LOI, they already know you, they know what to expect, and again, it's not automatic. They certainly dig in and ask questions, and you go through 3 investment committee meetings, but everybody's generally rowing in the same direction and is looking to get the deals done. So it was a good, really collaborative approach.
No, that's great to hear. And I guess since you didn't come from the MSP space, what did you, obviously a lot of people I think are eager to get into this area, love the contracts, the recurring revenue, but anything specific that made you, I guess, like this space even more, or now that you're, actually operating the business, what are some things that you would look for if you were to buy an MSP again?
Sure. I got a version of that question from the investor base they're like, Nick, you come from a manufacturing background, chemical background. Why should we expect you to do well with a IT managed service provider? And I have a few answers to that. One, the very simple answer is at the chemical company, our internal IT department reported to me, and it's not an exaggeration to say that we like ripped and replaced the whole IT infrastructure of that business. So the physical hardware, applications, putting in CRMs, phone system, like everything. So I was on the buying side of service providers like this. And, frankly, that buying process was awful. I could not stand sitting in these demo meetings. It seemed like everybody that came in to give us a demo had an extreme mismatch of what our business needed and what they wanted to throw up on their 50 PowerPoint slides. And it was just like an hour of time wasted every single. I just didn't like the experience. So I thought that was a unique perspective to bring, having been on the buying side, and I want to make now the buying process for our customers to be as seamless and painless and as possible. The other part of it is I look at these types of businesses as their service business. So there's nothing really unique about the products that we offer compared to all the other MSPs out there. So what you really compete on is your customer service. And one of the things I think we did really well at the chemical company was thinking about that business as a customer service business. We would talk to our salespeople and say, hey, look, what we're selling is customer service, and our chemicals just come along with it. So I really wanted to bring that approach here. And, we've spent a lot of time and a lot of effort in really evolving this business to have excellent customer service. Not to say that they didn't have that before, but when you speak about it as the leader and make it core to our mission is excellent customer service. I think that's how we win in the long run.
No, that's really interesting. And anything specific about this specific business that you liked during diligence?
Well, the IT MSP space is highly fragmented, right? There's thousands of them across the country. Most of those are fairly small. I mean, they might be fit great for a self-funded approach where maybe they have $500,000, $1 million, $1.5 million of EBITDA. $1.5 million would start to be a little bit sizable, but a lot of them are sub $1 million of SDE or EBITDA. This one had crossed that barrier. There was about 45 employees, certainly more than 10 million of annual revenue. So it was kind of in that sweet spot. Wasn't small, wasn't huge, but it was big enough where the company had attracted some really nice Fortune 500 customers, name brands that anybody would be familiar with. So we could go after big accounts, enterprise level accounts, just due to our size. So there's that attractive part of it, but of course also the size financially. Several $1 million of EBITDA is a nice business to start with.
And was there a big team in place already? Like, what was the owner's role when you were buying the business at this point? Was he retiring, like a classic sort of boomer retiring and handing, over the business, or what was the situation?
Yeah, that was exactly it. So this owner, he had a broker, and his situation was he wanted to retire at closing. And the business had been on the market for for a while when I discovered it, and had private equity interested, but the owner didn't want to do that because he didn't want to sign up for another 3 to 5 years of running the business. So he classic search fund case, you've got an owner, he wants an exit, but also needs somebody that can come in and run the business. And so that's the situation that we had here. There was a management team in place. So that was another thing that was attractive. Certainly when you're looking at this size of a deal, where there's a layer of management. We've since just in the past month, I've basically brought on my own new executive leadership team, which has really been fantastic for me. So folks I know and work very well with that, we're really positioning ourselves for the next stage of growth.
That's interesting. Interesting that you said that it was on the market for a while. I would have guessed that a business of this size in this space would have been super competitive and, gone off the market very, very quickly.
Yeah. I'm comfortable at this point saying, for a lack of a better way of describing, we weren't tricked, right? Because you have that thought, right? Like if everybody has passed on this, like what am I missing? Like what's going on
Yeah.
here? But that's not what was going on. And I also do think, we were fairly lucky to find it, because these days, I think if I listed this business with the financial performance that we have, it would go very quickly. I think there's a couple things that were contributing to it. One, the owner looking to retire. I think this was priced out of a self-funded search. It wasn't going to work financially for a self-funded person to acquire it. But from a strategic or private equity perspective, I think the story was a little confusing, right? Because in our business, we have our traditional like IT managed service part of the business where you're doing data, cybersecurity, telephony, all that normal stuff that we think of. But it also had this healthcare side of the business where they were installing and servicing technology equipment that is unique to hospitals. And I just don't think they didn't have the story right. So people would look at like, well, what is this? Is it an IT business? Is it a healthcare? So I think that led to some confusion that really just, the private equity folks couldn't get their heads around.
Yeah, no, but one man's trash is another man's treasure, right? So
Yeah.
no, that's great. And
And
did you?
can I just?
Yeah, please.
Yeah, just to add to that, we hear a lot of searchers talk about their risk tolerance and how do they size up the risk in looking at these deals, and that was clearly one of them, right? So what is the risk associated with this, convoluted story, if that's how it presents itself? So we had to get comfortable around that and put, some story of what is our post-acquisition thesis around these two verticals, if you want to think about it that way.
That makes sense. It was, when you saw the opportunity, was the goal that you saw a huge growth opportunity and eventually you would, grow this significantly and sell to private equity, or in a couple of years, or what's the ultimate sort of goal of the business that you saw or that you went into this with?
Sure. Well, certainly, to be on a path of growth, I think that's important for any business, whether you have investors or not. Yeah, we've all heard the saying, you're either growing or dying, and you need that growth to fuel. I always talk about it with our employees, like we want to be a consistently growing company because that provides opportunities for everybody that's here to grow in their own career. It allows the company to invest in excellent healthcare and other benefits. So, the growth is more than just putting money in the bottom line. It's a way for us to take care of all of our employees. So, yes, we had specific plans around growing organically, looking at follow-on acquisitions. I would love to do, a tuck-in or two of maybe a $250,000 or $500,000 SDE business. I think that would be great. There's a quote I heard somebody say, there's the fastest way to double the size of your business is with your signature, right? Just buy another company. So, some of our specific growth ideas were with this group of healthcare customers that are buying a very specific part of our product line and not any of the IT managed services. Well, there's a whole big group of existing customers. Just cross sell them your IT services. So there's a lot of like low hanging fruit. I don't think there's anything magical about the approach we're taking. Just pretty basic sales and business development growth strategies.
I guess going back to pre-close, how did you guys structure the deal with the seller?
Yeah, ours was very simple, right? So, certainly a chunk of cash that, from our perspective, came from our equity investment, but also the debt. But the seller got a check and then a small seller note.
And was the business sort of growing pretty steadily? No crazy red flags from that perspective? Or was the seller note tied to anything?
No, the seller note is just a straight note, not tied to anything. The business before we acquired it, I had very steady and consistent revenue. It was basically flat for the past handful of years, but that's not uncommon, right? As an owner is looking to sell / retire, right? They're going to keep things very steady and safe for themselves. Not looking to make major investments in the business. So that was all fine. I mean, that's the whole point of this model, right? You take a very nice, stable business, and then you come in and do a few things to put it on a accelerated growth path.
That makes sense. And were you also based close to the business when you were acquiring it, or were you open to moving, I guess, at the time? I didn't ask this earlier.
Yeah, I was open to moving. I mean, that's a big decision. So, certainly spent a considerable amount of time and energy, nearby where I live in St. Louis, and this business is in St. Louis. So, I mean, that was just another benefit.
That's great. I'm curious to hear, post close, what was it like the first 90 days during that transition? Anything unexpected? Any surprises, I guess? And how did you sort of tackle those first 90 days?
Sure. I'll start with day one. I tell people that, that was a very, very strange day for me, and I'm sure it was for everybody else, right? So, it was a Monday morning. Nobody outside of the executive team here knew that the owner was selling the business, right? So, we never got exposure to anybody outside of the executive team. And so, the owner calls everybody in at 8 a.m. on a Monday. They have no idea what's going on. They're all sitting in the conference room, and there's me sitting in the corner in a suit and some donuts on the table. And, in a matter of maybe 30 seconds, maybe it was a minute, the previous owner said, well, hey, I sold the business, and here's the new owner and CEO, this guy, Nick, standing in the corner. And it was a bit of pandemonium at that point. You had some people crying,
Oh,
people
wow.
clearly in shock. Yeah, because I mean, this is rocking their world. It's just a huge surprise. And then, I spend the day with the owner, walking me around, meeting people. It was a very, very weird day. But after the first handful of weeks, the owner departed, and then it really became my show. And I did a number of things, hopefully, to really accelerate that getting to know me gap and that trust gap. And I think we got there fairly quickly.
What were
But
some
even
of the
to this,
things? What were some of the things you did to instill trust, I guess, and job security for the employees, I'm guessing?
sure. Um, well, I certainly tried to assure them, like, look, nothing is really changing other than the ownership. Nothing's changing, right? So, we're not moving the office location. We're not changing your benefits in any negative way, your health insurance. Just keep doing tomorrow what you did yesterday or today. To really try to assure them of that. But the one example I can give, and I heard it from somebody else, it's a very simple thing. Sat everybody down, maybe it was the second or third day, handed out notebooks, and told everybody, write down your ideas, ideas you've always had, things that you think the business should be doing, should be improved, problems with the business, write down your thoughts. And then let's have a meeting, individual meeting, and let's go through your ideas. And I told them, I can't promise that we'll do every single one of them, but I will promise that I'll listen to you. And I think that was really the first thing that kind of, calm things down, let people know, they can start to open up a little bit. So I thought that was a good step.
No, that's great. And one thing you mentioned early on, in the pre-calls that you were able to grow the business that first calendar year, first 7 months. A lot of folks who buy businesses see that J curve, that dip in the beginning. What do you attribute that to? And what were some of the things you did that really caused the business to grow, I guess, since it was flatlining for years?
Yeah, I don't know if there's much that I can like personally claim credit for. I think this change of ownership maybe infused some energy. Um, I try to tell not only my leadership team but everybody in the company, like, I'll support any good idea that you can come to me with. Like I'll support and we'll just do it. So I think that got people excited. We implemented new technology in our stack, different tools in our sales process. We invested in Zoom Info, for example, to be able to better prospect and cold call. So I think just kind of these little things of people seeing that I'm willing to invest in the business and therefore their success generated some excitement. We've got a handful of some just really amazing salespeople that I think really got jazzed up after the acquisition and have been just absolutely crushing it.
And did you have to change their sort of incentive structure to get them to be more excited, or did you kind of keep everyone as is?
Yeah, we didn't really change too much in terms of the compensation structure. For we do no cap on commissions. I've seen other MSPs and other businesses, they will cap commissions. So people can go out there and earn as much as they're willing to go put the work in. And I'm not going to share somebody's salary, but I have a salesperson that makes a lot more than I do in their commissions. So they're killing it.
I love that. That's fantastic.
Yeah.
Curious, I guess, over the next couple of years, what are you most excited about now that you've, I guess, been running the business for a little bit, and have really, taken over? What are you most excited about next?
Yeah. So, right now sitting here, what is it, September of 24, what I'm most excited about is, I now have my executive leadership team. So, my head of sales, my head of operations, and I have a role called a chief of staff, who is really kind of my right-hand person. This has been a huge step for me. I would say before they're joining, I was way into the weeds of the business, and you probably have to be for the first year. I'm like following up on, did the laptop get ordered? And I mean, just crazy stuff that it shouldn't be doing. So I looked at kind of the first, call it the prior 12 months to today, is just stabilizing the business, getting a handle on it, getting control of it, if you want to think about it that way. As now with this executive leadership team in place, my team, this next year is really about our cohesiveness, our teamwork, and really pushing the values that we want in the business, integrity, customer service, all of that stuff, pushing that with the rest of the employees. And I think it'll really take our business to the next level in the next 12 months.
No, that's exciting. I think for a lot of the folks that, are interested in the managed IT service space, I'm curious, what are sort of some of the biggest challenges with running one of these businesses, or some of the best things, I think are all the things that people think are great with their recurring contracts and sticky customers, true. Curious to hear more about that.
Sure. I mean, there are great things about this industry, this business. The recurring revenue is one of them, but there are some pretty significant challenges. I think you're always going to be under price pressure. I mean, you could almost say that what is offered is commodity like. I mean, I have large, you call them publicly traded competitors that they're constantly into my customers, and they're saying, hey, we'll slash your prices. I had one that I was dealing with recently. it was a 3-year contract renewal, and I've got a competitor in there saying, I'll give you your first year for free. And this was a private equity owned competitor. So, they'll do, they're going to do anything they can to build up that huge book of contracts, right? So even if they're losing money or they're giving a lot of away for free in the first year, because 3 to 5 years from now they want that huge stack of, look at all my contracts. So that's the game that they're playing. So price pressure is a big one, and the other is these IT managed service products. It's something everybody needs, but nobody wants to deal with, right? Everybody needs their cybersecurity. Everybody needs to back up all their data, et cetera, et cetera. But it's not the sales call that the owner wants, right? So you kind of have to break through that barrier a bit.
That's interesting. You mentioned sort of are 3-year contracts fairly normal in the space, I guess, would be my first question. And what is sort of like a good metric to shoot for if someone is diligencing a business like this? How many of these contracts should be renewing on an annual or
Yeah,
a 3-year basis?
yeah, I think that's evolving as well. So not that long ago, it seemed like a 5-year contract was pretty normal. These days, nobody's signing 5-year contracts. So now you try to push for 3, but what I'm seeing a trend in the industry is shorter and shorter contract terms. Like a year is customers are really pushing for like a year. But I know one business owner that exited his MSP is a much larger business than ours, and he had no contracts. Everybody was month to month. All of his customers were month to month, and that was kind of part of his pitch to his customers. Like, I'm not going to tie you up in a long-term contract, and it proved successful for him.
What is and I guess what's a good benchmark to shoot for in terms of renewal rates then in the industry?
Well, certainly as high as you can. I think, in the 90% is not unreasonable.
Okay, that's great.
For us, we're certainly in that range.
And when you guys are, I guess, competing for new contracts, is it also competing on, is it also trying to get ahead of, other people's whose contracts are about to expire? Is that a similar sort of situation?
Yeah, definitely. So we pick up a lot of business as people are coming off contracts. Again, I'm not going to name any of the competitors, but they're pretty well known. The really large competitors out there, they come in and they win their business typically on low price, but their service is awful, right? So tying it back to, this is a service business, a service industry. So these customers, they think they sign up excited about some cheap thing, and then over the course of 3 years they're completely frustrated with the lack of service they get and are just dying to get out of the contract. And that's where we come in with our high touch, white glove, uh, excellent customer service approach, where we win that business, and that's how we keep it.
Got it. That makes a lot of sense. I guess, I know we're at time, but final question for me is, do you feel like this was the right decision now looking back? I know you first were going down the independent sponsor route and then going down the search fund route, but is this a path that you would have gone down again if this was, a year and a half ago, or I guess now a couple years ago? And what would you have done differently for those that are maybe going down this path for the first time now?
Yeah, there's several layers to that. So, first, yeah, I think this is has been a great opportunity for me. Super appreciative of the people that supported me to get this deal done. I have a great group of partners that essentially leave me alone. I mean, this feels like I own 100% of this business, and that's really good for me and my style. So that's all been great. What I do tell people now, prospective searchers or active searchers, is you really kind of owe it to yourself to look at each of these different models of buying a business, right? Self-funded, traditional, independent sponsor, maybe even write out the pros and cons of each one, and really, really understand what each one means for you individually. If I had to do it again, and should I do it again in the future, I think I would gravitate heavily towards the self-funded approach and own the thing 100% right from day one. There's a lot of obvious benefits to that, but the other point that I like to make to folks is until you've held the checkbook of what could be millions of dollars, you don't really understand how much money that is. So, convert that to you being the 100% owner, and you've got, as you grow the business, a couple $1,000,000 of SDE to do what you want with, reinvest, take dividends, whatever. It's a lot of money.
Completely agree. No, that's great perspective. Nick, I guess final question. If people want to reach out, where can they find you?
Sure. Yeah. Thanks for asking that. I'm always happy to try to be a helpful resource to anybody in this community, whether it's on the search phase or on the IT front. So you can find me on LinkedIn. Nick Akers in St. Louis, STL Communications should be pretty easy to find.
Amazing. Nick, thank you so much for your time today. This is great. I learned a lot. No others will feel the same, but thank you so much. Let's please stay in touch.
Yeah. Thanks. I really appreciate it.